Okay, we're looking at moving average here, and the moving average is another graph or another way of working out possibly when to trade shares. Okay, it gives us a good indication of what's going on and helps us to make a decision on a buy and sell move, because what the moving average does is it kind of smooths out the bumps. That's probably a good way of talking about it. But if you remember back to stats when you did something like if we had these numbers here and we added them up, the average of them, because you divide them by 4, would be 4.6. So on average it's about 4.6. But if you had that on a graph, you might have a 2 here, then a 3 here, then a 4 here, then a 5 here. And the average of 4.6 is kind of floating in here. So it takes out this kind of the rising thing that's going on. So you can imagine if you've got a graph that's going up and down like this, all over the place with your daily prices, and you could draw a line that just averaged out these daily prices and would kind of follow the trend of the market but take out those those rapid moves up and down. This might give you some really good times about when to buy and sell when these two lines cross. So that's what a moving average does, and if you've looked at the other screencasts, it actually shows you how to do it in Excel and it kind of explains it a bit better. But basically you get your daily prices. So if you imagine this happening, we'll pretend that we've got a 2-day moving average, which is a bit short, but that's okay. So day one, you might have $1.30, $1.45 here, then $1.62, then $1.81, and then so you get down to 90 cents, and you're doing a 2-day average. You'd add these two together and get the average, and write the number down. And then the next day, you'd grab these two and write the number down. So that one disappears off the screen. Next day, grab these two, write the number down, that number disappears, and you keep on moving like that. So it's an average, but it's moving. So that's why you get the terminology moving average. So you can see that you're actually just going along with the share price. So you actually delayed just a smidge, but it works quite nicely. So let's have a look at a couple of moving averages that you can get off of any website that tracks shares and what that shows to us. So here we've got BHP Billiton, and this is a moving average, which is a 20-day moving average. So you can see this is a daily price going up and down, and you can see that it's got peaks and troughs. So you've got these peaks up here and the troughs down here. But because it's a 20-day moving average, these things that are moving up and down, the red line, which is the daily price, because it jumps around a bit, it's very hard to work out a trading decision. So this moving average, this 20-day moving average, just smooths it out. And you can see how it's just a little bit delayed, a bit behind what's going on because of the fact that it's 20 days. So, but it gives you some good indications when to buy and sell. When your share price goes over that line, which we're looking at just here, it's just a little bit here, you've got the share price is now gone above the moving average line there, which is a good indication to buy. So you buy when it goes over the line or above. Okay, so that's a good buy indication. So you might think that's a great time to buy, I might do that. As you can see, the share price goes up and down a bit, and using the moving average, you can see when it gets to here, this is probably a good sell option, okay, or sell indicator. So by using that, these little peaks and troughs that appear in the kind of daily transactions don't scare you as much, so that you therefore don't make a trading decision that's really rushed. A moving average gets rid of that kind of knee-jerk reaction of getting rid of stuff. But what you'd probably also do with this as well is you'd probably work out that if you bought them, say at this price here, you'd probably work out what your break-even price, which might be floating around there, and then you could buy and trade within those margins. So if you bought it there, you'd work out what your break-even price was, which I assume would be somewhere around about here. And then you could say, okay, when it gets above that, I can buy, I can sell them. So then when this happens, and it comes down again and it hits your moving average line, you can say, okay, I'm above my break even. But also, because it's now dropping below that moving average line, it's a good indication to sell. Let's have a look at a different time frame, because this is a 20-day one. If we go to a couple, we've got a 5-day one and a 30-day one. So the 5-day one is this one here that tends to be a bit more erratic. You can see it flowing around. If you just look at the little dot there, it's moving around. So it really does mimic what's going on in the share market, and really does mimic what's happening in the buying and selling thing. So if you're doing a short term, the short term investment, you might look at a short moving average. Okay, if you're looking at long term investment, you'd look at a longer term moving average. Okay, Kind of makes a bit of sense. So let's have a look here. Let's look at the long-term one, which is our 30-day one, and see if we can find a good place to buy and a good place to sell. Now, once again, I do kind of like this is the line we're looking at here. If we go to here, that's a really good indication when to buy because the red line is now going above it, and over here is a really good time to sell because the red line is now dropping below it. So let's compare that to the shorter one. I'll do it in say a red color. If we're looking at the same kind of thing, the short-term one, you'd be buying and selling rather quickly. So have a look here. You go to buy, and then you go to sell. Now, of course, because it's shorter term, it's going to be more reactionary to what's going on in the market. But if you are looking at making those short-term profits, then this is probably a good way to do it. But notice how much it hasn't really gone up too much when you look at the scale over here of how much the shares have gone up. So you've got to take that into with a pinch of salt as well. But I'd be drawing on this as well, my break-even point, based on when I buy them. Okay, and then you also might want to look at your margins. And we talked about this before. So let's look at the black one there and see how we go. I'll do it in a highlighter. So let's pretend that we've bought our shares here. We might work out that our break-even point is somewhere around here. Okay, we're happy with that. That's our break-even point. Then we might say, okay, if that's our break-even point, that's really cool, but I want to make a couple of percent gain. I'm going to make about a 2 or 3% gain. So this is my 3% gain line. And then down here might be my 5% loss. I'm happy to make a 3% gain or a 5% loss. I'd probably do it around the other way, but that's okay. So this might be your 3% gain line. This one here is your break-even line. And this might be your 5% loss line. So then you're trading within margins. So you know if you buy this place here, if you sell it when it gets to here, you're making your 3% gain. If you hang on to it for a bit longer and it comes down to here, you might want to get rid of it so you get rid of your 5% loss. But using these three things in working with that moving average, you've got some really good times to when to buy and sell. But really in this course, as long as you realize, or as long as you remember that as soon as the share price goes above that moving average line, it's a good time to buy. As soon as it starts dropping below that moving average line, it's a time to sell.